Good evening and welcome to BizTech's Technology Show, the show where we highlight how technology transforms people's lives. Now, today we feature Tyme, a digital banking group from South Africa, which is in Asia now and looking to apply for digital banking licenses across the region. Now, our guests today are Rachel Freeman, the Chief Growth Officer of Tyme, and John Kane, the Chief Information Officer of Tyme. Now, John and Rachel, welcome to the show.
Thank you. We're so happy to be here.
Now, could you give us an overview of Tyme to start with?
Yeah, sure. Tyme is a digital banking group, but more importantly, we're a serial bank building technology company. We have Tyme Bank in South Africa, which is our first deployment, which is our take on digital banking. And by our take on digital banking, we believe we build digital banks for mass markets in emerging markets. And how do we do that? We run an interesting hybrid model of digital banking, where a lot of digital banks have digitized the front end of their bank and removed the customer interaction with another human being and built around and kept a lot of their back office. We've digitized most of the middle and back office of our bank, and we run on a digital platform. We never collect pieces of paper or anything like that, but we have a physical interaction with the customer. And the reason we do that is we have a moment of education where we can educate customers and when we onboard them and teach them how to use digital channels. We do that by embedding ourselves into existing ecosystems, retail environments, existing cooperative groups that might have a need for banking services, and we place ourselves there. We onboard customers in a self-service digital kiosk manner or over their own device, and then we offer them a range of digital banking products that we believe are the most affordable and best suited to the majority of people in markets. Our real advantage is that we run a standardized platform that we believe we can replicate in other countries, not in the way we interact with customers, which definitely has cultural nuance, but in the way that the transactional system works and how basic banking works.
Right. Now, John, I'm going to come back to you in terms of your execution strategy and how that's worked in South Africa so far. But Tyme has a very colorful history and a relatively long gestation period. Now, originally, it started off as a Deloitte consulting project funded by telecommunications provider MTN Group, and which became a standalone business in June 2012. 2015, Commonwealth Bank of Australia acquired 100% of Tyme. 2017, 20th of September, Tyme Digital obtained the first operating license from the South African Reserve Bank. Now, that was the first banking license issued by the Reserve Bank since 1999. And then in 2018, African Rainbow Capital Financial Services, owned by South African billionaire Patrice Motsepe, acquired Commonwealth Bank's 90% majority stake in the business. So it's basically evolved over almost a decade. Now, John, you've been there for a long time. Walk us through how this whole thing evolved.
We'd always, from a team working in it, always had the ambition to build a digital bank. We had histories in other industries, but a lot in banking, and the intention was always to change fundamentally the face of banking, especially in South Africa. South Africa has a very good banking sector, and from a technology perspective is world class. It is unfortunately very expensive. And it deprives people forms of access in terms of the cost and physical access to it. So the intention was to build that. With MTN, the original intention was to build a digital bank. That never came to fruition, but what we did build was the platform for MTN's mobile money in South Africa. Subsequent to that, the ambition was still there to build a bank, and the Commonwealth Bank of Australia certainly wanted to do that. And they entered the South African market with Tyme to do exactly that, to build this new age bank that could be replicated in other markets that they were already in Asia. While that was very fruitful and we did manage to build it, they withdrew from international markets at that time, and the opportunity came about to make their percentage of the business available. ARC was already a shareholder in the business at the time, although they were a minority shareholder. And we were presented with the opportunity to to have the first majority Black-owned bank in South African history. And that was obviously a significant milestone, really relevant to all of us, but very relevant to the regulator. It was also an opportunity through ARC's assets to look at their broader financial ecosystem. So it was a great match made. And Patrice Motsepe and the African Rainbow Capital team have always had an ambition to do good for South Africans. And the opportunity to introduce a bank that was significantly cheaper and really focused on financial inclusion was one that they weren't going to pass up. And we were fortunate enough that we were the best fit for that.
So Brian, just to add there that I think it's important, even though we've had a number of changes, that the actual founding team and the two co-founders and the founding team are still almost the same. So we always say that John joined Tyme at the dawn of time, and Koen and Chart, Torek, who's the CEO of the bank in South Africa, Cheslin, who runs commercial, Nate, who will be going to the Philippines. Everybody was in the business the whole time. So while it seems like there's a lot of change of ownership, actually the team that's been running Tyme has been the same since the beginning.
And that passion has been the same.
Yes.
Now, Rachel, I'm going to ask you this question. I understand you're just about to hit 3 million customers in South Africa. Now, that's a 2 years plus acquisition time period, if I'm not mistaken. Walk us through some of the challenges that you faced, and what was the growth like in terms of acquiring these almost 3 million customers?
Yeah, so we celebrated our 2-year birthday on February 26th, and we're about to have 3 million customers. So we're very, very proud of this. And our growth has really been because of our strategy of customer acquisition, and where we have the kiosks in the grocery stores, so in Pick n Pay and Boxer in South Africa, and the ambassadors that do customer education. We have some fundamental truths that we believe at Tyme, and one is that people like people. And so we have the ambassadors that are doing education in the grocery stores, and that really enables people to feel comfortable and trust the account and the product very quickly and start to use it. And so we have, as well as that 3 million number, we have a very high activity rate. We have over 50% of customers using our account in the last 30 days. So that's much higher. We don't have a lot of people who are joining onto the account and then just not using it. And we think this is because of the acquisition strategy, where we first onboard the customer in the grocery stores with the kiosk, do a lot of customer education, and then we have integrated into the checkout counters, the till points. So what you can do cash in, cash out at the till points. So we make it very easy to bank with us. We don't require that people are what we call digitally savvy or digital natives. We actually, what we say is we meet people where they are, and then we help them walk down that digital journey. And that has meant that people have really grown to love us as a product and as their bank. We have, as a new bank, a very high net promoter score. Our net for across the board, it's 51%, which is very high compared to the average in South Africa of 29. But we're very proud of this. For low income women, it's 69%, which is an incredibly high number for a bank. And that we know that we are really meeting the target market, and we want to be an inclusive bank that works for everybody in South Africa. And when we got that number, we knew that we were achieving that. We onboard about 120,000 new customers every month, and that number has stayed fairly consistent. Of course, it was quite challenging during the COVID period and in the different lockdowns that happened. South Africa had a very significant initial lockdown, but people were allowed to go to the grocery store. So we were able to continue to onboard customers during that period, which I think was unique for a digital bank globally, that we saw a continued interest in our product. And while COVID, of course, has had a big impact, actually, it made us really focus on what do we want to do with our customers? How do we want to help them grow and thrive during a difficult period? And so it focused our strategy, and we think that that's helped us actually improve and continue our very strong growth in South Africa, as well as enable us to come to the Philippines.
Now, Rachel, from your explanation there, one of the key success factors, I think, is the fact that you utilize these physical human ambassadors to onboard customers. Can you kind of walk us through how many people are involved and what do they actually do?
So our ambassadors, we have about 700 ambassadors in South Africa, and we employ them through a youth program called Harambee. Our ambassadors did not have a job before, and we do aptitude tests and then go through a training program. They have to work within one taxi stop, and that's a South African term of taxi stop, from where they live. So they're really in their community, and they come to the same grocery store so people can come back and ask them questions. So when we started Tyme, we didn't know if people were going to onboard on their own device, on their phone, or if they're going to onboard on the kiosk. We have and still have both options. But what we found is that 85% of our customers were coming through the kiosk. So that really showed that people very much responded to both having the self-service kiosk in the grocery store, as well as the ambassadors. This very unique part is that you get within 3 minutes a personalized debit card through the kiosk, and then you can actually go to the cash register and start to use it and put money in the account immediately. So this is an active Visa debit card that comes through. And since I'm here with John, I always say he's the inventor of our kiosk. So we are now on maybe, I don't know, 20th generation in terms of kiosks. So we've really developed the kiosk, and so we're from when we started that, and working with Pick and Pay in the grocery stores has been one of the fundamental pieces of Tyme. Even when we were engaged in doing mobile money with MTN, we still were thinking about how to work through the grocery stores. So that's why when you think about, and when we started to think about Asia, we knew we wanted to come into Asia and work with groups that really led in terms of retail infrastructure. And JG Summit with its very strong retail, and Robinson's Retail with its very strong footprint across the Philippines was a natural partner for us.
Now, so I'm going to come back to you about that Filipino execution strategy and partnership just in a bit. But John, I've got to ask you, you started with a white sheet of paper in terms of your technology 9 years ago. Could you kindly explain how your technology stack evolved and your strategy evolved from a technology standpoint?
Sure. I think our technology has led from what our strategy was. We looked at what the problems we saw in banking in South Africa were, which is those three forms of access as we talk. Financial access, is banking too expensive? Emotional access, do I understand and feel involved enough to be able to engage with financial services? And the last one is physical access. And we thought we had to solve for those three things. So generally a digital bank, digital first bank goes, I will just put an app there and then people will download it. That didn't make any sense to us. That's not how people behave like they are now. The majority of transactions globally are still done in cash. The vast majority of transactions are still done in physical retail stores. And while we live digital lives, we're on Facebook right now, that does not translate to the kind of trust that you would get, that you would require for a banking relationship. So we addressed those things and we thought, okay, first we have to deal with cash. Where do people have cash? The average retail store has more cash in it on any given day than any bank branch. They already have it. They build it up during the day. They want to get rid of it. Let's help them get it out of their tills and put people in a place where they can have a relationship where they immediately see a bank account with a transactional need to do it. So placing ourselves in the retail stores. The moment you're in there, you need to integrate into the till points. So we have to have technology that integrates to the till points. We also need standalone technology where we can onboard customers that is self-service, that occupies space in the retail store, but doesn't bother the people who are in the store. So thence the kiosk was born. When you look at the back end of that, if you're going to run a system like that, you don't have the luxury of the manual processes of branches. We're left with the idea that if we're going to put machine learning and automation, we need to put it not where the customer meets the bank, but where the bank meets the staff meet the bank. We had to automate as much as possible. So we run a very automated system in the back office with a heavy focus on the customer education piece. So we chose good products around that. I'd like to call out some of the people that we do. I mean, Mambu is our core banking partner, and as a composable banking partner, it allows us the flexibility to build a radically different type of bank, still using their same core banking product. Being able to build on cloud technology. And we were the first in South Africa to be able to do that. First license in 20 years, but the first people to try and build a bank on the cloud was very entertaining as a process to go through that with the regulator. They agreed to that, has given us enormous flexibility on scale and to change our architecture as we've gone along. So our technology, we have lots of pieces around it, and we have composed our banking platform, and we build what we consider the Tyme Bank platform, but we use a lot of partners in that platform. And that we believe is replicable in other markets, but it all stems back to those first three principles of financial access, emotional access, and physical access.
Now, Rachel, I've got to ask you, what was the catalyst for the move to Asia instead of the more obvious strategy of really expanding within Africa itself?
Well, when you look at our model, it's about kind of mass market, and so you need large populations. And so while Africa has very interesting markets, they're not large population markets and with national retail, whereas in Asia, you do have those larger populations with national retail. So that was a logical move to come to these markets in Asia after being successful in South Africa. And what we look at is working with what you call middle income countries. So that's where Malaysia, Philippines, Indonesia, all are middle income countries, which have enough of a large enough population and that national approach of different conglomerates and companies to make it worthwhile to do a digital bank. We had originally actually a digital bank a long time ago called eBank in Namibia. So there was a little bit of a move outside of South Africa, or actually it was before even South Africa. But then we sold that when there was the acquisition by CBA. However, there's just not enough people in different countries in Africa to make this kind of a feasible long-term option. So when CBA had acquired Tyme, then a number of the management team were moved here to Hong Kong, where CBA's management was. So it was very logical to base us in Hong Kong and then to start thinking about the different markets in Asia. We had mapped out a strategy across Southeast Asia of which countries made sense, and really looked to understand what is the need in those markets and how our model would fit into those, meet that need.
Okay, but one of the things is this: how do you think you would compete for these highly coveted digital banking licenses in Asia? When you are a new player in the region, you have little or no brand awareness, and only recently, really, you would be perceived to have boots on the ground.
Well, I mean, actually, so yes, but our model is not to come in alone. We are very much of a partnership strategy. So we believe that if you do a digital bank in any country, you need to have 4 components. You need to have the funding to do that digital bank. You need to have regulatory experience. You need to have distribution or a customer acquisition strategy. And when we refer to that, it's how we work with retail stores. And you need to have the technology and experience. So we bring that last part, which is the technology and experience. And when we look at coming into a country, we look and evaluate the partners based on the other parts that are there. And so what we looked at when we look at, either Philippines or Malaysia, Indonesia, Thailand, any of these different countries, it's thinking, what is the partners that make most sense? And we really, the same with the way that we work with African Rainbow Capital in South Africa, we very much have a partnership strategy. We look to embed into ecosystems like Pick and Pay, for example, in South Africa, and think what is the best way to do that, where our model would make sense, and also where our partner would understand our model. There are a number of groups that think, oh, let's do a digital bank and it's going to be solely digital on the phone. That's not our model. And we are very clear on how we work, and we can recognize which groups actually would respond very well to our thinking. And then we look for a real fundamental kind of philosophical view of the world. And we are very much a mass market bank. We very much view financial inclusion and inclusive banking as important. And we're looking always for partners that have that philosophical view as well.
And I suppose therefore Philippines was really the fit, and that's why you chose the Philippines as a market to
Yes.
enter. And also with the JG Group, which has everything from supermarkets to malls to financial services offerings.
Yes. So, when we knew and had heard from different advisors and friends around the region that the Philippines was gearing up for their digital bank licenses. And so, we had always thought Philippines was the ideal market. And when we heard that there would be digital bank licenses there, we thought, okay, this is our chance to come into the Philippines. And we then, through different ways, met with the JG Summit conglomerate and the Go Conway family. And it was an automatic match. This is in a situation where there are lots and lots of meetings where we thought, do we work together? We immediately sensed that there was a perfect fit and moved very quickly from there.
Now, how would then fit Malaysia being your next market that you're looking at? Malaysia is looking to give out digital banking licenses as well. Who are you partnering, and why should the regulator pick you?
Well, we can't actually go into who we're partnering with for Malaysia, but we can talk about why we think our model makes sense for Malaysia. Malaysia is actually more similar to South Africa than the Philippines is, so we can see exactly how we would work in Malaysia, and the idea of customer education is very important there. We did a lot of ethnographic research in Malaysia early on to think of how we could work there, and it was clear that the models of if the ambassador model would work well there. Customer education is very important, and there's ways to integrate into ecosystems the same way that we did in South Africa. Though there are also a lot of new things that we found out that were quite interesting as well. So, it's not that we think you can just take everything that we did in South Africa or what we'll do in the Philippines and move to another market. You have to do that initial ethnographic research and really understand the markets, the ecosystems that are there, and how we can plug into them.
Now, you've recently raised 110 million in funding. Now, how is that investment going to be put to work? And either of you can take this question.
So do you want? Well, I mean, we can both talk about this, but the majority of this funding is still going to be in South Africa. Then, part of it will be from Asia, but the majority will be in South Africa. This is the funding that will take us through what we call full commercialization and to break even. Digital banking is not an undertaking that should be taken lightly. Can be quite expensive, and you need to have the strength of funding to make all this work over a time period as you build up the bank. So we're very, very pleased that we have the trust of our new shareholders that have come in to help us to complete that whole cycle in South Africa as well as launch in the Philippines.
Okay, so essentially we're looking at several rounds of funding further down the track as well.
Maybe not several, but we can say that this was a very crucial one.
Probably not for the South African business. We must also understand that this is a heavy technology undertaking. And that is why reusing the lessons learned in the platform into other markets makes each one more and more cost effective to do. Building a digital bank, unlike a traditional bank, and often people go, oh, digital bank, you won't have branches, how it'll be so inexpensive, is the opposite in logic to what it is. You can build a traditional bank by building one branch and then adding another and then adding another. If you build a digital bank, you have to build that bank for scale on day one. So whether you have one customer or 10 million customers, you have a lot of the same fixed cost. So number one, learning the lessons to reduce that cost gives you an advantage going into future markets and finding ways to reuse the platform. But also, once you've built it, you can work on making it less and less expensive as you go along. I don't think our intention would be to raise much more in terms of South Africa. That is done, but we would definitely be looking for the additional banks we look to build. But probably each time there, the value will be better as we know more and more about how to replicate that model continuously.
I've got to ask both of you final question. It's been a nine-year journey. especially for you, John. What are the key lessons that you've learned over this 9 years that you can share with others, other entrepreneurs or business people, in terms of executing something as ambitious as this?
I would so start with resilience, and people say that, but it's really resilience, not in it's keeping true to your principles and sticking with what you believe in. We've achieved what we were trying to achieve 9 years ago. It's taken 9 years. Things will change. Partnerships will change. The dynamics of our business, the services we provide have changed. But through that, we've kept that constant focus on driving towards that, and every action we've done has added to that. Our technology has consistently built to achieve that. So that resilience is the one thing. It will seem very dire at stages, and it's never as dark as it seems, and the light on the other side is always much brighter than you expect.
Rachel, any final thoughts from you?
Yes, so I think that I've been in Tyme for 1.5 years, and when I joined, I would say that we were in the race to scale, and that's not different from other digital banks at that stage in time and other, fintechs. And very quickly, once COVID happened, we really had to change it became a race to profitability and as well as a race to scale. And, I think that now when we reflect back and when we move into new banks that we create, we have that knowledge of, you cannot just think about scale, you have to think about profitability from the first day. And so, for example, in South Africa, we have recently launched our first kind of major lending product, which is a buy now, pay later product called mortar. Mm-hmm. And, that's being launched after 2 years after we started the bank. When we come to the Philippines, we will be launching mortar from the beginning. So that's a big change that we've had from South Africa that we've learned.
If I can add to just that small piece there is COVID has taught us some valuable lessons, not just in resilience, but in the value of deep partnerships and the value of the shareholders you have and their commitment to a cause. ARC's commitment to building a bank during one of the worst crises in modern history is a remarkable thing.
John and Rachel, it's been a fascinating conversation. Thank you for taking your time to be on this show.
Thank you. Thank you for having us.
Now, I'm Brian Fernandez, and I've been speaking to Rachel Freeman, Chief Growth Officer, and John Kane, Chief Information Officer of Tyme Group from South Africa on BizTech's Technology Show. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like and subscribe to our pages.